Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?
Alright, so hi guys, welcome again to the channel. For those of you who are new to the channel, this is where I show you guys how to trade the markets using Market Profile. Now, as I always say, so many of us, or so many of you, are trading with methods and viewpoints that are just archaic, that the institutional players have not used for a very long time, and it feels like it has almost been all the old stuff repackaged and sold to the retail public. It has some tinges of the 2008 financial crisis written on it, in the sense that it wasn't a crisis. It was a repackage of obviously bad stuff which was sold to obviously people who didn't understand what they were buying. That's how I feel today about modern technical analysis versus what I'm showing you here today. Obviously, I've invested the time and the money to build my own market profile tool because I do not mind trading CFDs. There is a huge edge to trading CFDs on both the cost front and other fronts. In the grand scheme of things, I don't see why I shouldn't trade CFDs. If I lived in the United States, I would have been more prone to marketing to, i.e. I should be trading futures, i.e. on an exchange, which I have done, and I know what that's like, and I know the cost implications, and etc, etc. In some cases, CFDs are expensive depending on what you trade. For example, if you're trading equities, it's quite expensive because it will cost you less to buy shares on an exchange than it would be to buy them as a contract for difference. But anyway, that is not the subject of this video. The subject of this video is to kind of show you guys how I trade Market Profile and some of the positions I'm looking at and what you should be looking at, and some of the things ultimately that professional traders are not going to tell you. Right? So it's really important that we kind of pay attention, because I genuinely believe that this short couple of minutes you spend with me could be potentially life impacting to your trading. But anyway, for those of you guys who've been following my channel, who've been watching my videos and kind of know what this is all about, then once again, you can go back to my last videos and you'll see all the stuff that I've spoken about. But once again, we're going to start with the Aussie dollar. So I'm structurally bullish on the Aussie dollar. Now, we've had a few good upswings. I'm in a long position for the Aussie dollar, and I will flash my P&L on the screen as we go to kind of see where I'm positioned at the moment, where I sit, and what I'm expecting. Now, we have a massive gap in value here, and I am expecting this to be filled. It's been a rocky week. It's only Tuesday, and we've had so much volatility. You know, I can't tell you the last time, and I don't normally like to split the profiles, but if you can see what happened here between H and K period, it's insane, right? So more than likely, this consolidation, it has to play out in some shape or form, right? So even if we do go down a little bit, ultimately, you know, there is the weekly low from 2 weeks to be and the weekly low from 3 weeks to be. So in my opinion, if you did get long this asset, then it's one worth holding and staying with, right? Because again, I'm structurally bullish, which means I'm expecting an upswing with the Aussie coming along pretty damn soon. Right, but however, for now, we have failed to break out of the balance, right? So the initial balance form, we haven't broken out, and of course we do have some offers stacked. We did speak about this in prior videos, but I remain structurally bullish because if we do take this by Wednesday, Thursday, we're going to see a very quick ascent here on the Aussie dollar. It does feel like a bullish metal story, but at this point in time, we just have to wait and see how that plays out. But I am structurally bullish on the Aussie dollar. And then we come on to crude oil. I've got a position in crude. Obviously, this is doing considerably well. Again, I was buying on the lows, so again, once we get that dip, I was long, and then here we go. Now, what are my expectations for crude? As we're setting up now, I mean, it will be a very big breakout. If we do take the upside, it would look like a very similar story to the profile print we've seen on the Aussie dollar. As you can see, we've got a very similar shaped profile, similar shaped structure. So I do think if crude oil moves higher, we might see the Aussie dragged up. Now, however, we can see that they're moving in opposite direction. So there's definitely Aussie weakness as opposed to dollar strength. So it seems like the flow is going elsewhere. I'm looking at where it could be going. We have to think about the things that are going long. So let's pop over and take a look at the S&P 500. So again, a little bit of consolidation here. We had a big consolidation last week. I was expecting a pop this week. Structurally, I'm bullish on the S&P 500, and I haven't seen that. Again, we've spoken about this time and time again that, you know, again, the 3990 level is important if we slip off the handle. But you've got to remember, guys, we got some responsive buyers here in R&W period over 2 weeks, right? And now we're consolidating. If we look at this as a complete structure, it does look like a pop consolidation to pop again. Now, we are trading from a prior value high going back a few weeks, but we haven't really hunted any liquidity. So this is not usually the place we tend to drop from. But hey ho, I could be wrong. Now, if you look at the equity markets, which is why I'm having this conflict about the S&P as possibility or not possibilities. So again, if we just flick over so if we just flick over very briefly to what's happening on the equity side. So I'm short puts on Shopify. Again, but if you look at what's going on with AMD, for example, you can see the puts got crushed, right? So if you're short puts on any of the AMD strikes, you killed it. I mean, the 87 puts are down 28% today, right? So they've lost 46 cents off their value, right? So they've gone pretty deep, right? So if you just to kind of put that in focus, so if we just pop that over for a second, so you can see that drop there, huge, right? So the puts came within the space of a day, they've lost. They went from $2.15 to $1.14, right? So this is a huge drop, and that was the last print. So if you're a short puts, you're collecting in 2 days, depending on how many puts you short. It could be a... Anyway, I won't get into option selling just yet, or what we would call selling premium. I will dive into that in another video. I have a ton of courses which are covering a lot of these aspects. I am releasing my course on options, which is all about selling premium, because one of the things I do here as a trader is I don't deal with the whole narrative of like, oh, yo, Lamborghinis, $1 million. That's all just bullshit. What I focus on here is how can an ordinary person who's come into the market to trade, maybe they got $1 million, maybe they got £1 million, maybe they got just 100 grand, maybe they got 50 grand, right? How can they play the market so they can get guaranteed growth in their asset portfolio without taking the extreme view of, oh guys, I'm just leaving my money in the S&P 500 to grow for me at 5% annually? Well, yes, that works if you got $20 million in the bank, but if you don't, then you know this is an unrealistic point of view, and the people who are pushing that are clearly have no clue about things like cash flow erosion and how the market works. So I'm not even going to argue about it. You do what you do. However, if you are that person who is looking to grow their portfolio, who's looking to come from a base where you perhaps don't have a lot of money, and to be fair, a lot of people get into trading to make money, right? Not really to, you know, not because they already had money, right? Doesn't make any sense. Of course, you might have a bit of money, but relatively speaking, you're either going to be middle class or, you know, downright, you know, just poor person, and that's perfectly fine, because that's the point, right? The markets give everyone an opportunity to uplift themselves from what could be called a reasonably, what could be a reasonably poor position to a better position, and that's important. And it's a growth curve. It might not happen overnight. So again, I don't want to sell the idea that you're going to grow overnight, but the reality of the situation remains is that you need to make money, and that's the point. So again, how do we do this sustainably? That's the goal. That's why I'm doing all these videos, and that's why I'm telling you all this stuff, is so that if you have 100 grand in the bank, you have 200 grand, not financial advice, guys, but if you have 50 grand, 100 grand in the bank, how can you grow that into something sustainable, right? You know, where it's reasonable return, where you can actually say, you know, maybe you made 30 grand on top of that, right? But how do you do it sustainably? Again, I don't want to get into the numbers of these things, right? Because then that just gets all messy and everyone has their viewpoints and perspectives. Whether it's grounded in reality or not, it doesn't matter for the people who are listening. So the point is to grow. So how do we do this? So selling option premium is one way to give yourself a bit more of an edge so that you can reap income on a weekly basis, and you can actually call it income, right? Because you're making it. And even on days, and you guys will follow me on the Discord, and there are links to the Discord, even on days when, or I should say even on weeks when I don't collect massive amounts of premium, I still collect premium. And if I end up with a week where I'm flat, rest assured next week I'm collecting a hell of a lot more premium. And some weeks I will be flat, right? So I'll go in to sell premium, and you know, the market just doesn't do what I want it to do on the strikes, and I have to either cover, so buy back those options, right? And I might have to incur on paper a loss, but I will buy more, I will sell more premium, so I'll collect more credit immediately to offset that. And 9 out of 10 times I can normally offset that before the week closes, because there's always an option to strike the sell. I mean, today we had a big jump on AMD, for example, right? So this is the 3-day options, right? So today's Tuesday, 3 days to expiry, and we get a massive drop like this. But actually, let's get the maze up, right? That starts to make a lot more sense to people. So let's say the 98 puts, right? So again, look at that drop there, right? So again, these puts came from just the other day. That was not that long ago, the 15th of May. These puts were going for $4.15. Now they're down to 42 cents, right? Huge jump in AMD, guys. That's what it is, right? So it killed the value of the puts, right? So if you're short puts, you sold at 415, it's 42 cents. You can cover those. It's a couple of hundred quid per contract, guaranteed income. Once you've covered that, the money's in the bank. That's yours. In fact, from the moment you collected that credit at 415, the money's in your bank. Now it's just let time work in your favor. So that's what we talk about when we talk about theta, right? The theta effect. Let theta work in your favor. Right, so again, no doubt it's early days. If we rip, you can always sell more. Look, the point is, like I said, it's all about sustainability, doing something sustainable, right? So again, the part of this whole thing is to show you guys that first you want to have your regular weekly income that's a little bit more guaranteed, a little bit more stable, right? Remember, your trading is a business, right? So this is the business, and then you want to come into your less stable stuff, right? More unpredictable stuff, and that's like your leverage products, right? Like your CFDs, right? So the S&P 500 was up 1 minute, now it's down and it's faffing about. It hasn't really affected the fact that AMD is like super high and the puts have been crushed, right? So you're not really getting exposed too much to these directional plays. Of course, we could fall off the ample here, we could find some more bids down here. Bottom line is, you have to have a structural bias, and mine is bullish. And again, you can see from my P&L how all of that's playing out. Again, moving on to gold. Gold, like I said, for me, it's not a trade this week. There's nothing there. We're trading at the low end of value. We're trapped with an inside value here, and then we're breaking down. Typically, I would expect a bearish run back into value, maybe hit some bids, and then we bounce off there. So it looks like there's a narrative here pushing dollar strength, which is flowing in, and that could affect my Aussie position as well. So that all the weakness we're seeing, in my opinion, is related to the fact that we are trading very, very softly in some of the assets, and that is showing itself more or less as dollar strength. But it's early days. We're not even at 4 p.m. yet, which is when we get the 10 a.m. golden hour, where the stock market really picks its direction. Cable was significantly up, just today. It was almost breaking out, and now we've had a failure back on K period. A lot of volatility, guys. It's too much volatility, in fact. So again, if you look, we got an offer stack here. It's important to make note of that. So again, that's the resistance, guys. When we think about natural range, we could test it, break through, but at the moment we've kind of dipped back. I'm structurally bullish on the pound. Again, I've been long from these lows, so my expectations is at some point we're going to start to pull and hug this level and get higher, right? That's what I'm looking for. We've got a wide initial balance at the moment, so we got a failure here, but we have a massive gap in value. So we can't necessarily ignore that. it is a gap in value and it's visible. Dollar yen, again, this is moving to the upside now. I had a long in dollar yen. I actually cut that, and you'll see from my P&L that I cut it off, took some profits off dollar yen, because again, if the dollar weakness was going to continue structurally, I should be bullish on dollar yen, and that's what I was. Again, the reality is that it was acting as a hedge, and I was under the impression we're going to see some dollar weakness, so it made sense to cut the hedge. We have a gap in value here as well, so I am expecting us to trade through this gap sooner or later. But again, we got value high to test, so no doubt this was a good take profit level anyway, so I cut that position, so now that's money in the bank. Dollar CAD, of course, I got a short position. I was confident on that dollar weakness versus the CAD. We're now driving into bids. My expectation is that we should find some lower prices dollar CAD. Hopefully that feeds into more dollar weakness, and then we can look to capitalize on that with some of the other positions we've got. Bitcoin, again, like I said, I would wait for lower prices, weaker Bitcoin, stronger dollar. Let's see how this narrative plays out, but I'll definitely wait for lower prices. Sterling yen, which I'm long as well, structurally bullish. I think sterling yen is one of the strongest, technically anyway. One of the things I would do first, always before coming to the profile, is determine structure. Right, again, you first want to determine your directional bias, and then you want to execute that. These are weekly profile, guys, so these are pretty long-term, played in the intraday. One of the beauties of the profile is that you could see everything within one viewfinder. You don't have to do no top-down analysis. You don't have to sit there and go, okay, let me open my weekly chart. That's the resistance level. Let me open my 4-hourly now. Oh, that's the resistance level. We're taking in some, value gapping. Oh, let me open my 1 hour, and then I gotta go to my... How can you actually trade anything? It's gonna lead to wild speculation and risk. So, what do you want to do? Get a profile up. Construct it in the weekly profiles. Now start looking for statistical areas of value. Value low, value high. Are we breaking initial balances? Then you want to learn how to do macro analysis. I teach that. If you come to my Discord channel, a lot of this stuff is there for free as well. Again, if you want the good stuff, it is what it is, guys. Nothing good is always going to be for free. Right, but in any case, it doesn't matter. You're going to find something that's going to resonate with you. Right, but open a profile, have a look. Balance breaks. Where are we going? What's the structure? Macro structure. Okay, we're bullish long term. Now I need to know where to execute. I'm only looking for long positions. I don't care about the short side. Again, I could play this both ways. I said that to you guys. Like, oh, we're opening up at value high. It looks like we're going to trade value. I look to buy the dip. Well, yeah, I could have shorted it and then bought the dip. But it's that kind of trading that gets you into trouble. Because yes, it's an opportunity, but what if we'd hit the bid stack and then reversed? And I'm trying to get short this. I get run over because the reversal could be so strong that within the space of a day, I'm like, I've done like 80% of the range. So markets they're not progressive like that. Most of the moves happen within a period. And if you aggregate all of the moves, you then get an entire move, right? So if we break from up to down, I mean, how much of this move was one directional, right? There was a lot of bias back and forth, right? So that people are going to be shorting at the bottom, getting wasted at the top. There are people going long at the top, getting wasted at the bottom. Because no one is thinking about the bigger picture that actually we had a gap in value, so we're probably going to fill that gap. So maybe I want to buy. It's a long gap, so that kind of violates natural range. So we're probably not going to do the whole gap this week. But if we get close enough, then maybe I want to be long, right? In which case, big return on the week. We come back down, we test the level, boom, we're back up again, right? So you could, but if as long as you were staying long, right, and you were watching these statistical levels, then you had a good trade location, guys. Good trade location. I've added the Kiwi to my roster. Again, it's something I should have been looking at. Again, massive gap in value. I do think these are all going to pull back. Again, structurally on the Kiwi, it's a little bit different on this one because I can actually find a bias here. I still lean towards the bull side because I think there's a case for a retest of the upside because again, we've got a big gap in value here, which has remained unfilled, right? So we made several attempts to fill the gap and then just kept failing. So this was a tricky one with gap fills, right? So because again, this was a very bearish setup. So structurally we were bearish. So that definitely did create some issues. So again, we're now at that place where we've got a lot of market inefficiency in this market. So I'm expecting a big move in the Kiwi. And you know what's funny? What's coming up for the Kiwi? Royal Bank of New Zealand. What's coming up? Interest rates. So I think, don't quote me on this, I'll check the dates again, but I think in about a week or so, or in a couple of days, we have the interest rate decision for the Kiwi, right? So I think it's one of the major central banks left that hasn't really done their interest rate, and everyone's expecting a rate hike. That's the idea. So I'm expecting that the market reaction on that rate hike will be quite strong to take care of the inefficiency. So again, that's how we sometimes marry potential fundamental information in terms of what kind of value it's going to be. We have a nice little bid stack here, so there's a lot of interest clearly at these levels. So you can see us trading to bid stacks twice, break up. We have a slight gap in value to the downside. So again, we're expecting that volatility, right? Are we going to fill the upside gap before we fill the downside gap? I think the Kiwi is a little bit thin. It brings a lot of questions, right? And that's kind of what we're looking to answer with the trade location. So I would have been long this happily, but I put it on my radar now because I don't have a position in it. But based on my key positions, I think that so far the portfolio is doing great. Again, it's all about diversifying properly, guys. As you can see, I've got positions all over the shop, but you know, for the one thing I'm always doing is looking at how we're trading relative to the longer time frame, and then I'm executing on a shorter time frame without having to change my viewfinder. Because again, if we think about what happened to Kiwi, we dropped off. I'll be looking at, we're going through value. It's a value trade. We stopped short towards the end of the week. This is a great long risk at value low, or risk at 2-week value low, or risk at 2-week low. Well, let's push this out to the longer term time frame. But then I'm looking for rebounds that take me back into value. That's about 182 ticks there, guys, and I'm making it hard for the market to get me out of this trade. But this will class as an intraday trade, right? Because I took it at a really good location that maybe only intraday traders against the week can see. And that's okay, because the profile tells me exactly what I need to see on a weekly profile. So I can see the long-term picture, but I can also see the short-term picture, rotation by rotation, right? So I can see, okay, we're going down. That's wonderful. Do I want to take this trade? Hell no. It's a great trade, gap in value, trading through value, wonderful trade, but I'm going to remain bullish because that's the structure. I'm structurally bullish and I can see the inefficiencies and I'm looking for great trade location, right? Granted, it wasn't bad to be short from the highs, right? We weakened, we broke down, and you wanted to take the balance. That's great, but I'm structurally bullish, so I don't want to get trapped into bearish plays, because if I get trapped in bearish plays, then I don't know how to get out. The upside is unlimited against me, right? So I didn't want to get trapped in the bearish plays. So again, if I'm wrong and this turns out to be a bearish play, right, and it just keeps going down, then that's fine. You know, where my risk is a portion, the chances I'm going to get tapped out are going to be pretty low, because the profile tells me exactly where I want to put my stop losses, right? So again, guys, take this as a lesson, right? So I'm giving you a lesson here for free on market profile. Again, I have a lot of good stuff on this, so don't forget to check out my Discord. I've got a lot of courses on this as well, so check them out. You know, everything's quite affordable here, so I think you're going to learn a lot, and I think that's important if you're going to grow up. Or you can keep doing the same with what you've been doing, entirely up to you. But awesome stuff, guys. I hope you've enjoyed this video. We'll keep an eye on things. I keep track on this. I'm making videos more or less now daily, because I think it's important, so that we can see how we can balance when things are not going entirely our way, when we might be overweight something. But how do we keep everything stable? When we trade CFDs, it's really difficult, because again, you got these assets that are highly volatile, in some cases manipulated. It's a little bit different from trading stocks or anything else. So if you're trading currencies or you're trading futures, you got to be smart about it, right? You need to have a long horizon. I mean, when I think about all the volatility, how many people are like completely underwater when my P&L is slightly up, right? And when I say slightly up, it's slightly up. It could be a much bigger P&L. About 2 weeks ago, it was a massive P&L. Now it's down, but it's up, right? It's down relative to what I should have in it. But how much have I taken off the table? I've taken quite a bit off the table, and I still got money in the bag that I can take off the table. If I closed all my positions today, I'm in profit, right? That's okay. That's more money. I can rejig positions again. I'm trading longer term. So again, down to this trade location, if I'm feeling bullish, I can take off the table, go back in, reconstruct a whole new portfolio based on what I'm seeing now, right? I can see a lot of assets are looking pretty strong, right? And I know I should be on the back of some of these, right? But trade location isn't perfect, but I can just keep my eyes open and construct a perfect portfolio again against the major assets, right? But I'm already in the game, so I'm going to stay in the game. But anyway, guys, like and subscribe. Help us grow the channel, create this awareness so people can have an opportunity to trade and enjoy their trading. I think it's the greatest joy. You don't have to trade massive sizes in order to make money. You just have to diversify properly, good trade locations. You're going to get big moves. And even when you're wrong, your downside is going to be limited. You're not going to be wrong on everything at once because you're looking at good trade location. Right? It's a hard lesson to learn. Yeah, you could focus on one thing. You could. And just trade that. I mean, there are great ways to do that with a profile. If I was just looking primarily at the Kiwi, there's lots of opportunities here. But when I get directionally wrong, if I'm just looking at one thing, there's nothing to help hedge me out. The markets are largely correlated, so you got to know how to do this. It's not a one-size-fits-all. But there are a couple of plays I could show you historically, and the good thing is that even when I'm looking at historical stuff, it's all relevant to now, right? So if I was trading now, what would I do? I'd be long, right? I'm going for the gap in value. That's obvious, and there's an offer stack here. Market likes to look for liquidity, so it's probably going to come check out this level, right? So I'm holding, right? Again, if we, what would I do if we hit, I'm structurally bullish, we hit this level, we sell out, look to buy the dip again, see if we're going to go higher. If we start to break down and give me a different kind of vibe and like maybe return back in a value, well, then I'll go for a value trade, I'll sell value, right? That's fine. But again, it's all relevant. There are lots of plays you can do if you're just trading the one asset. That's true. But if I'm trading multiple assets, like I'm short dollar CAD, that's profit being built. Yeah, that's fine. I'm Freddy Sender. We're going to probably keep ticking lower. We filled the gap, so that's out of the way, which was the intention, is that there's going to be a gap fill. We traded close to the bid stack, not in it. Maybe we're going to reverse. Maybe we're going to see dollar strength, right? But I'm short dollar CAD because structurally I'm bearish on the Canadian, right? So again, if we pull a little higher, that's okay. I've already short this before. I took profits on the move down here because I was expecting this pullback to fill value. I've shorted that pullback. We're going down here. Am I going to take more profit off the table from dollar CAD? Maybe, but I want to see if we get a little bit more downside and we fulfill that structural play. But either way, I've made money from dollar CAD. Dollar yen, did I make money? Of course I did. I haven't stayed with the trade because I think that, well, we might extend higher, but then we're probably going to break back down again. So this feels like the top of where I'm trading. And realistically, good trade location was buying value low, right? 133. That's 240 tick to the upside. So again, if you're a little early, then it's a little bit of profit. So if you're trading sort of mid value, then that's okay. That is perfectly okay. Just take some stuff off the table. Cable, I'm bullish. I'm structurally bullish on this. There's a gap in value. I wouldn't give up. I think it's just volatility. We're going to eat a lot of pain. A lot of traders are going to lose money. That's fine. Right? Trade location. Again, if you took this A period, right? So again, I was long the pound a little bit early because again, we dropped out and I started to get long about these levels. Again, this was great trade location. Start of the week, added to that pound position and boom, right? It's 102 ticks. I'm going to fill the gap. That's 120 ticks. If we hit the offer stack, that's 169. Good trade location. I don't care. I don't care about, the opinion. I'm just trading the market for what I see. Gold, we're going down. It looks that way, but we're value low. I don't want to take this trade. It looks ugly. Trade location's poor. If I was going to short this, I needed to be doing this from value high, not down here. S&P 500, I'm structurally bullish. Consolidation, great, I get it. We might even trade down to value low, but again, we got a bid stack. Minus development, we go down, we could get bought up. This is a strong weekly level on both sides. If that happens, boom, we're going higher. Right? Crude oil, I'm bullish. Like, look, we're going, right? Because I'm sticking with it. Because again, we saw some sellers here. They're getting weak, right? We're trading against the bid stack. Huge competition. Why would I want to be short this? So there are opportunities everywhere, guys. You just have to be able to see them, and you can't see them if you're trading your top-down views, your candlestick, drawing your trend lines. Anyway, thanks very much, guys. Like and subscribe. To my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention. attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?